So let's start with this week catalyst. Yeah, the Middle East conflicts are still going on, which are high. VIX is extremely high now. It's 29 yesterday. It closed at 29.5, and it rose almost 20+%. Yeah. Mm-hmm. There is a volatility, but yeah, the reaction is not there. I don't know the exact reason. Yeah, so there are two consequences I'm expecting now. Either which has to cool down in next 1 or 2 days, or market has to fall. One thing should happen for sure. No, typically it happen. My point here is it will be huge. That's what my point. Either 30% drop in VIX. Yeah. So actually, Friday drop also, it was due to basically the job market data. Job market data surprised actually. They expected, I think, around 50K job creation, the net actually, but the actuals was minus 94K or something. It's a huge surprise. It's clearly evident that US is losing jobs. So eventually losing jobs is the cycle, right? So that the spending power will be reduced. The money rotation will be reduced. So that is the major news yesterday than the Middle East conflicts. I have heard a couple of news like, they are like initiating the talks, and during this weekend anything can happen. That's the another reason Friday afternoon there was a sharp sell-off after 2 o'clock, I think. So these are the things I'm expecting next week. If, escalations not cooling off, then the main focus is on US economy only. In my view, 75% still market is running on the US economy, and 25% is max it is considering the war effect. That's why VIX is spiking. That clearly tells us that there is a fear, but this is fear due to the only war, and people are not considering the US economy strength. That's why markets are not free fall. The another view is like I don't think there is something they want to wait and see, or maybe they want to keep this rally, hold these levels until 2 more weeks where we have the Fed meeting. There were rumors 2 weeks ago there is a rate hike, but it's confirmed last week there will not be hikes. There will be a pause only. Maybe market might have taken that as the positive US economy point of view. As I said, 75% the indices are considering US economy than the external factors like this war. That's my understanding from last week. So Fed 1 year consumer inflation expectations. Yeah, they're saying inflation is rising, but last month numbers, right, those are surprised. 2.4 we are at, right? So their goal is 2. I know 2.4 to 2 it is very difficult to get, but we are close to that. We are coming from always almost 7 and 8, right? So 2.4 is not something very high inflation in my opinion, but getting down from 2.4 to 3 to 1 is very difficult. Let's see how the market makers plan this. Per my knowledge and my expectations, next Fed cut, even though it passed, from May, the new Fed chair will join. I'm expecting the interest rates from next to next Fed. March 1, they will. I'm not expecting any Fed rate hikes or rate cuts, but after that, I'm expecting the cuts. Maybe they want to lose the bullish momentum until that point. We don't know. Tuesday we have global supply chain energy price volatility news. I'm not sure it's that very high one. So $90 a barrel is the concern. So oil price also another concern. Again, when oil prices rise, it will impact definitely the whole world, but the US may not have that much of impact because of the oil prices. So you see, like the defensive stocks like industrials and other sectors now falling because of the high oil prices, because they buy the oil and the gain is from the oil, but still the XLE is not spiking that much. Only United States oil is the only one is spiking. That's why I'm just expecting this is the very short-term impact, not the medium or long-term impact. There was a couple of news on that Hermos also. Initially they said they blocked, then they blocked only for US and Israel. Then now they said that they are going very selective depending on which type of transportation is going on. So Iran also not that doesn't have like a strong decision on that to close completely kind of stuff. You can find that information on the X as well. So there is no concrete decision to close this one. If they close it, then the oil may spike even more. So the highest I see USO is the 110 calls last week. So it can touch 110. I think 105 it touched Friday. So 110 is the max I see. We need to see how it will react after 110. CPI. So the key data, anyway, we need to watch CPI data. So this may, if CPI spikes, definitely IWM and other key QQ will definitely have a big dip. It has to be either 2.4 or, at least less than or equal to 2.5 the Wednesday. This is the very, very important data before the Fed for us. So this is the one I'm going to trade or watch. And let me change the color. Next one is Oracle earnings report. So basically it has beaten. We can see like, the fall in the AI application companies, is over. They still continue to fall. That's the key thing. I'm going to watch. If Oracle reverses, then there will be a big rally, one more rally, and all AI stocks and software stocks. Initial jobless claims. This is the last week's surprise. Market is not yet digested. If there is any additional surprise, it is going to be bearish. Adobe earnings, I'm not considering that measure or anything for the overall market point of view. US GDP last time it went down, but I'm not sure it will directly impact on the within this week. The consumer sentiment is another thing I'm going to watch. So it has like a retail and tech impact on this. On Friday, core PCI also very, very high. So this week, you see like Monday, it's a very typical one. I don't see like major thing, but only the concern is New York Fed expectations at 10 a.m. Whatever spike or whatever drop at 9:30, we have to wait for till 10 o'clock to watch the market here. And Tuesday, I'm not sure like there will be a huge impact on that one. Next one is Wednesday. Definitely we have the good big data. And again, Thursday we have big data. And Friday, of course, we have like a lot of data. So this week also very data heavy. Depending on like the surprises, the market will move. The key levels it's still holding. We'll see them while we review the indices. I'm going to the indices now.